Okay, welcome back. Uh, on the explanation we did earlier, both on the Breaker blog and this setup that I just drew here now, do you have any question? Good.
Yes, sir, I have a question. There's something I'm kind of confused about this April setup.
Okay, what is it?
I don't really understand the April setup, but I was thinking maybe due to the language, because all this break structure, I think from my own knowledge, the way I studied it after I went through the PhD, I think this break structure do happens maybe when the market reach a particular zone that push it back. Maybe that is why what we call the break structure. So in the book of things, it says that all these things happen, all these the trend line happens due to a particular zone that pull it up or pull it down. So I don't know maybe I get it right. So I'm kind of confused about this A plus of picture.
I just told you what break of structure is in this particular zone. We're never supposed to be discussing break of structure here, sir, because a break of structure is very simple. It's very simple. What we mean by break of structure is like this. A chart is coming down like this, right? Like this. Then this one now is supposed to be another block, right? That should hold this trade to go up, but it did it. It broke it. This is a break of structure. It broke. It went up again, right? It came down. It broke it. Another break of structure. So you are still expecting a sell. It went up again. It didn't break this one, right? It came down to break it. So every time it breaks it, all you are looking for is a sell. You wait till it goes back. Then you take a sell from a sell zone. Yeah, there'll be a sell zone. Then eventually a trade just come like this and break this thing like this. Now, this thing that just happened now is a change of character. This change of character is now what bets what's it called now? A transaction for you to wait for to trade. These ones now, they are liquidity like this. All this one you're seeing here now, they are liquidity. Do you get? They are all liquidity. So after I take out a liquidity here, this one now, this liquidity here now, this is a change of character. This place I want to change. So this change of character now is what now gives you the avenue to say, okay, now it wants to start going up. All the while you were having break of structure. All the while, since break of structure, so you are looking for sell. It broke structure again. It broke structure again. You are still looking for sell. It broke structure again. You are looking for sell. It broke structure again here. You are looking for sell. But as you are not looking for that sell, what now happened? It didn't, your sell zone did not hold. It now broke your sell zone up to break this high here. So automatically, what you are not looking for is a buy. And how you look for that buy is what I've explained here. You started the class with me now, right? D1.
Yes, boss.
You
Yes,
started the
boss.
class with me. So if you started the class with me,
Yes.
you suppose that is where that is what I explained here, the first beginning. So this breakout of that structure that was that BOS, break of structure. That's what we call BOS, break of structure. This BOS that was happening now, the breakout to the upside is now what betted a change of character. Do you understand? It is break of
Yes,
structure when
sir.
it keeps respecting, it keeps break of structure. You are looking for the next. If it's buy to break of structure, it goes up. So you are looking for a buy again, continuation buy. But now it breaks above the buy. Sorry, the sell. So now you are looking for buy. So what are you now looking for in a buy now is what I have been explaining here since. Same applicable to when you are looking for a sell. Same apply to when you are looking for a sell.
Okay, sir.
So
Now I
and I
understand,
told
sir.
you the first character. You said what?
Sir, I want to ask more questions so you can explain everything all together.
I
The
should what?
take out, and I want to ask you another question so you can bring me the answer. You can write the answer together. So I want
Okay.
to be breaking this down.
What's the other
So
question?
now the liquidity, the way the liquidity is going, that brings us a downtrend. And when it breaks out, when you
I
have
don't know.
the
I can't. Am I the only one that can't hear you well?
That place
Are
is not
you?
audible. That place is not audible. New
That
one.
place is not audible, right?
It's not,
It's looking like
not audible.
the voice is
There's
so
too
the
much
speaker
bass
the speaker
or
yeah the
airport.
bass or something, yeah, or something like that. Make the question clear. That's how I'll be able to get you.
Can you hear me clearly now, sir?
Yeah.
I think it's
Can
better
Can
like
you hear me
this.
clearly now?
It's still the
Yeah.
same thing.
So I'm using,
Are you using AirPod?
yes, I'm using AirPod. Don't worry.
I think it's the AirPod.
Or is your phone on speaker? Maybe you're on
No, I
speaker.
think it's the AirPod.
Not
It's
from
the
your
AirPod.
phone. Okay.
Can you hear me now clearly, sir?
You
Yes,
can
we're
hear you.
hearing you now. It's the AirPod. So ask your
So what
question
I'm
now.
trying to have, what I want to ask now is the liquidity, the way it's coming down when you're having the break of structure, why the market was
Mm,
coming down, giving us downtrend. And now
yeah,
we now have a change of character.
yeah.
When we have a candlestick that just move high without any breaking of
It's
structure,
not
that
a
just go higher.
candlestick, oh. It's not a candlestick,
Like
oh.
like sorry, sir. Like when the market change the formation, then start giving
Yes.
off an uptrend
Uptrend, yes. Or a
and go
downtrend. This one is
above
an
the
example of a buy setup. So it's opposite of it is a sell setup.
all right, sir. And once the market goes up
Yes.
and touch the high, the previous higher, is that what defines and give us? Is that what we call a plus setup? Because I still don't understand the word a plus setup, and maybe because of the language, the terms we use about it. So I just want to know the
Look
exact thing
at
we call
why
the.
we call it an A plus setup is because three things that makes up this A plus setup is one, it must have a sweep. A sweep of liquidity. If it does not have a sweep of liquidity, you are the liquidity. Just so you become the liquidity. If it does not have anyone you see that does not have a sweep like this and does not have structural liquidity, just know you are the one that it will first of all come and take you out before going up. Okay, let's just say the way it is like this now, the way it is like this, as plain as this, it will come and take you out like this before going up. Have you not entered trade like that? You enter the
Yes,
trade
sir.
and
Yes, sir.
you are seeing other block here. Oh. You are expected to take the trade from another block here. Then the trade will just come like this, take you out, like this, take you out, right? And start
To
going
now
up.
make that one, the previous one is your sweep.
Yes, this one now
So the
becomes your
previous one not
sweep
now
that you
become.
would have here.
Mm.
Do you understand it now?
So the way it is now that we should
It
let
must
it
have
happen,
a sweep. Yes, it must have a sweep before
and
you
that will
start
be
talking
our
about setup.
protected low. So that will be the
Yes.
protected low. So anything we want to
hmm
do, the any trade we want to take there, we should just make sure that the stop loss is above the low. So no matter the
You
dancing that
want
is dancing,
you have been in this class now. There are two types of entry. You can enter on a confirmation on your POI. How do you get your POI? Your POI can be a breaker block. Your POI can be an order block. Your POI can even be a demand level
Can
in
can
that
be candle.
particular zone. Yeah, it can be a candlestick. You might see a demand level there. And what I've come
Can
to
be,
understand, your liquidity is always, your structural liquidity is always close to the POI. So always look for the next available POI close to your structural liquidity. Don't always just go down. Sometimes it might just come down, especially when they are very, very close. But sometimes check if there is a demand block here or there's a breaker block around here. That might just be your trade from here to here. And if trade comes to that zone, it will just give you a change of character and you'll be waiting for the trade in another block. But it will never come there. It will just do change of character there and start going up. Do you understand?
Yes, sir. Now I understand it, sir.
uh It must have a structural liquidity, or people call it inducement. It can be a structural liquidity, it can be an inducement, but it's all liquidity. What does that mean? This particular move that happened here now, it might just be that the move might just, it might never get to this place. It might even just be here. It might just get to this side and come back down, before coming back down like this and up, up you go. Might just happen like that. It might even be an equal high here, but just
and that's
make
where
sure, yeah, it might even be
and
an
that's where
equal
we
high.
have to pass. That's
Yeah,
where we
so
might have
Exactly. Now I understand it. I think
uh,
this is exactly what happened on V10.
just make sure there is, you are seeing a deceive here and you are seeing a sweep here. You understand? There must be a deceit. If there's no deceit, why I call it deceit so that you can understand it, it's deceiving you. That's a structural liquidity or a liquidity inducement. It is the first pullback a trade makes. It is the first pullback a trade makes to an intended direction. Take note, the first one you see, and you pick your POI close to the first one you see. Do you understand? So, like I said, the first thing you need to understand is it must have, I say it must have a sweep of
sweep.
liquidity. The second one, like this, there must be an inducement, IDM, or structural liquidity that you already know.
And at least two
Structural
break of
liquidity.
structure.
Yeah, definitely there will be a break of structure. Now, before you even see structural liquidity, it's break of structure that will give you structural liquidity. Do you understand? So you must be there. Do you understand? No, sorry. There must be a break of structure. Yes, there must be a break of structure. But a break of this break now, this break to this side, that will give you a change of character. Do you understand? Might not be the first pullback the market make. It might just, the market must have probably, the market might even give you something like this. Give you something like this. You understand?
Mm.
Do you understand? Before it moves up like this. Do you understand? To come and break this one. What
Yeah.
this rule number 2 is saying is that this one like this first pullback that you are seeing here is your structural liquidity. The first pullback the market makes. This first one.
After the protected low.
Yes, after the protected low, the first pullback the market makes is your structural liquidity. That's what it means. Do you understand?
Yeah.
Okay. It's very simple now. I don't know why we're dancing around it. So, but maybe when we backtest, you understand more. You know, when you are giving example, it seems to, okay, this is what you meant. Okay, it might just come to you like that. So you must
Let's
have
go.
yes, there must be an inducement. Do you understand? In the trade. Do you get? And there must be a structural liquidity, and the IDM or SQ must be the first pull back, the market makes
After the
to the intending direction just after the protected low. PL, let's just input it. Do you understand? This is just basically what you need to understand. You already know the structure, right? So where to put the structure now is what we are doing here now. Where to put the structure is what, okay, there must be a sweep. Okay, where should the, what's it called now? Where should the structural liquidity be? The first pullback before the last low. Okay, we put it there. There must be 50% premium. The trade must be divided into two, 50% premium, 50% discount. In the 50% discount, inside the 50% discount, the 50% discount should be divided by two. In the 50% of the 50% is when you look for your trade. That's where you look for your trade. So these are just the minor things about this strategy. Do you understand?
is
So can
every
we go and backtest this strategy now? Or there's still question to answer?
yeah, I'm good, bro.
Okay. Anybody that does not understand there, this video is always there. By the time you watch it once, twice, you study it very well. Study the structure, study what we are going to do on this back test. You already know, okay, this is what we're looking at. This is what you're looking at. All you need to do is to be able to spot this thing and be able to catch it, what's it called? At least 60% of the time. It's not even, you don't need to catch it 100%. I don't know if you understand. All you need to do is catch it 50% or 60% of the time, and you still be profitable.
Hello.
Can we move now?
Okay. Yes.
Oh,
You're
okay,
good.
good. All right. Taufik, are you following? Yusuf, are you following? Are you guys with us?
Yes, sir.
Okay, good. Now we move here. So we'll be back testing with the currency pairs. We'll be back testing with the currency pairs. And that's because synthetic market does not have what's it called now? Does not have a place where we can back test. Okay, look at this now. First of all, this is an A plus setup, right? So let me delete all of this. You can see where the trade moved from on the A plus setup. Look at it, where the trade moved from. But this is where the main zone is coming from. This main zone like this is an A plus setup. It will react. It must react from an A plus setup. It reacted already and it's going. It's going to go maybe around this zone now and then pull back to come and hit this one here. Because this is the last structure. Are you seeing it? Just look at the setup very well. Let me clean it. They will draw it over and over again so that D1 can understand this one before we go and do back testing. You see that I set alert here. Oh, so the alert is still on this. You can see it here. This is an alert. So if market comes now and touch this particular place, my watch will alert me, then I will come and take the trade. So it's clean now. It's clear. It's clear like this. So in this particular market, look at it. Follow me. We are in what? Downtrend. Okay. This one too. Are you seeing it? This is an A plus setup. You see the way it works. Are you seeing it? It works. Sweet move. No jagbajan ticks. This is a breaker block move. And the breaker block had are you seeing it? if you can spot the liquidity, I promise you, if you can spot the liquidity in any trade, I promise you, you will keep getting trades. Once you see liquidity like this, if you can keep seeing liquidity, once you see liquidity, the next thing is to look for the POI next to the liquidity. And this is the breaker block next to the liquidity. And anybody that took this trade from here now, you see how it bought. He even bypassed this, the A plus setup that was coming from the down. He bought crazily up. He bought like a mad person. Are you seeing it? All the way to this place. So if the person had in mind to hold, it would have just been good. So even if it's here, the person targeted, do you know how much the person would have made from here? From here to this particular zone. So that's how it works. If you're able to spot liquidity, first of all, what is liquidity? What is inducement? It means when the market deceives you. I don't know if you understand. When the market deceives you like this, that's what is called inducement. So the market induces you to take a trade. It pushes you to take a trade that you're not supposed to take. So once you're able to spot, okay, this is what the market did to me. This is one now, this one a fake move. So you will know when to spot the real move. I don't know if you understand.
Yeah.
Do you get? Ah,
Yeah, with you.
my guys, you know, I just want to get this thing. So I want to get this thing. Oh. This one is a breaker block move. This one is a breaker block move. I already showed you guys what a breaker block is. This kind of market, they don't pull back. But first of all, let's go to where we are coming from. But now, why I zoomed in before, I want you to see the trend. Which trend is this?
The
Which
downtrend.
trend is this? A downtrend. Good. So in the downtrend, you can see what has been happening in the downtrend. About the year. This is an entry. Price didn't mitigate it. Then the price moved out from this breaker block. You see, that's the breaker block. They moved from that breaker block. So this one too from a breaker block. So you can see it moved from a breaker. If you know how to trade breaker block are always very good for continuation of trend. It moved from a breaker block. Then you see this one now moved from this breaker block. Moved from this breaker block, right? Moved from this breaker block. Then this one here moved from that breaker block. Then this one also moved from a breaker. This one moved from an A plus setup here. It's an A plus setup. Look at, you can see a structural liquidity here, right? A strong low, right? You can see a protected low here, right? You can see a structural liquidity here. So if you zoom well or zoom out, this is 1 hour. So if you go to a lower time frame, you see your sweep of liquidity there, and you can see there's a break of structure here. Do you understand? So this one came down on an A plus setup in this particular zone. So it's from somewhere like this to somewhere like this. Yeah, it came down, right? Then all of a sudden, market now refuse to break this fucking low here. You now saw the market did not break this low. Are you seeing it?
Mm.
That was one. Secondly, this was the last high the market had, right? This was the last high.
Mm-hmm.
Market now break the last high. Are you not seeing it? Market broke it. Are we together?
Yeah, with you.
Now we have a trade. This simple thing that happened here now is what we mean by this. That is what we mean by this. Look at it. like this. It's coming, then it breaks. See, I'm here, like this, right?
Mm.
It breaks. This is it. This one like this is what I'm talking about. That I was explaining to you guys down below. Once you see a break like this, as it's coming down, it broke. So how do you know? Okay, it is very valid. How do you know this trade is valid? So we have our rule, right? We wrote a rule down there that this trade is valid. How do you know? This was the last low that the trade had, right? After giving us that last low, it now came down, and from this point on, you now notice that first, it did not break this one low. Secondly, it now went up to go and break this one. So now we have a trade to now be looking for buys. This once this thing happened to go and take out the last high, right? You start looking for buys. So that's where you now bring your strategy now. Here, this A plus setup. Here, you come once you see that something like this has happened. The next thing is to okay, let's look if this trade has the criteria. Now that we have this zoom, right? So the next thing, first of all, does it have a sweep of liquidity? Yes, look at the sweep here. You sweep this low, right? So where was the first pullback? Do you get? Did this trade break structure? Yes, it broke structure. If you don't even use this break of structure, right? If you don't even use this, you can use this. You broke these structures, right?
Mm.
And you can also use this. You broke this structure too. Yes. Are you seeing many structures were broken? Do you get? So when these structures were broken, it gives you strong confirmation that this buy is going to hold. Do you understand? So when this one happened now, where was the first pullback before the low? It was this.
Very weak.
Yes, this week was the first pullback before the low. So where is your protected low now? It becomes this particular low that created
The
the
long
break. Yes, it becomes this one that created. We're running out of time again. Uh-uh.
Ah,
How much time did you spend like this? It gives you this, that gives you this move. So this week now becomes your protected low, and your trade begins here. You're expecting trades from here. So all these things that are happening here now does not really concern you, and your target will be this first high. Although we know it's going to break it, it's going to break it. So you can target maybe a little bit above it. You get, you can target this. There's a structure here. So you can target this. You get. So if you still look at this very well, you will find out that there's an order block here. So that order block now becomes your POI. Yeah. So which now reduces your stop loss to this point. And your entry now will be looking at okay, here it's going to touch the order block. So it should be around here. So you have tight stop loss, which will now give you a 1 to 10 from here to this particular zone. So if you use $10, you're going to get $100. So you can enter on aggressive. And when you're entering on aggressive, it's advisable for you to put your stop loss below here. But if you are not entering on aggressive, and if you are entering from here, it gives you a 1:5 or 1:6. So, but if you are not entering aggressive and you're entering on confirmation, the stop loss is below here, and that's 1:10. It gives you higher risk of reward and make you, be able to risk higher. Do you understand? Do you understand?
Yeah, with you.
Not
Yes,
be
sir.
we are with you matter. When I get this one, not be
Yeah,
we
I'm
are
with
with you matter. Did
yeah,
you
I'm with
understand this thing that you're with me,
yeah,
right?
yeah, I'm with you. But I have
Okay.
a question. That
Oh, yeah. Ask me a
other
question.
block,
Yes.
that other block, I don't
Hmm.
understand it.
You don't understand other block. Okay, let me quickly explain other block. Other block is the last bearish candle before a bullish move,
Okay.
and the last bullish candle
Candle.
before a
Bullish
bearish move.
candle.
Yes,
That's okay.
before a bearish move is another block. Then a failed order block is a breaker block.
A failed.
Order block is a breaker block. Look at this now.
Okay.
You see, this one now is an order block, right? Market came and broke this order block. So when trade was
Okay.
now coming back to that order block, you see it resisted it and came down.
Mm-hmm.
That is it. So it's
And
very simple to understand.
I understand.
Okay, please just that's a POI. Other blocks are POI, breaker blocks are POI that you use to trade.
Okay.
Yeah. So if you look at this also, you see that there's a sweep around here, a structure around here. You see the way it came down smoothly. Although it dragged, this one dragged or it dragged too, but it sharp came down. You understand?
Mm.
So another point we'll be looking at now is going straight to go and back test. Do you understand what I did here at all at all?
I
Yes, sir.
understand.
Okay. Do you know why this one is buying?
Yes, sir.
Why is it buying?
Because there's a minor A plus setup there.
Okay, there's a minor A plus setup here. If you go to a lower time frame, you see a minor A plus setup in this particular zone. You will now come to see that in this zone that this place is buying from, you see that there is a sweep of liquidity in this particular place. If you know how to spot it, if I don't see them, you can't unsee it again. A sweep of liquidity there, and there's a protected low here, right? And there is a structural liquidity here. If you now go back to 1 hour, let's go and check. You see that is where Oga is buying from. Look at it. Unfortunately, I did not see it on time because I was busy with. Although it's not going to buy far, it's not going to buy far. It won't buy far. It might just buy this breaker block now. This failed order block will hold it and it will come back down to this place before pushing and breaking it higher. Do you understand? So that's what will happen. So this
Mm-hmm.
place now would have been my TP if I took this trade. And that would have given me 1:4. So if I use $10, it would have given me $40 and that's okay. It's okay. So if I use $50 to have risk, that would have given me 200 and that's okay. Right? That's okay. So that's how you risk. If you have pro firm account now, you'll be having big money to risk. That's $50. Have so $100 to risk. If I risk $100 now, this one I have passed the account already. So that's why A plus setup is very, very sweet. So we'll go to, this is 3 minutes remaining, but let's quickly back test. Or do you still want a third class, or we're going to postpone it to another day? Because like this, I never understand what
Every
they use it and
everything do with you.
it depends on Anna, make it not too much. If it's too much, it will never enter the head again. Okay, here we are second. Okay, first, let's just say first. Let's say market open second. Okay, let's just replay from here. 31st, second. Okay, second. So here we are. We are on January. So this thing is all of us now that will be taking these three together until reach the ending. So look at it now. Where are we? We are in what's it called? An uptrend. And first of all, you need to know, okay, where is this uptrend coming from? Okay. First thing you will notice is that there was a break of structure here, right? Right? There was a break of structure there now. Abi, you
Yes.
guys should be answering no.
Yes, sir.
Yes.
Now we they trade this thing together. Then you will now realize, okay, this next one that came down did not break this low, right? So it's still, so what are we looking for? We're looking for buys, right? So you now see that, okay, we're looking for buys. So since we're in an uptrend and you look at this one now, look at it, this particular one, this one did not break it to. So as it didn't break it, what are we going to be looking for?
It's coming down.
It's coming down, right? So, but as much as we know, this was in an uptrend before now. So normally, our TP should be, if you take a trade from this particular zone, the TP you'll be looking at or targeting should be around here, right?
Mm.
So what we'll be
Yeah.
wanting to know now is to see what the market has done, and so that we'll know how to follow it up. So this thing has been an uptrend since, and we have a TP level. We have a TP level in this particular zone that we are looking at here in this particular zone to take. Let me see. Yeah, I think this should do. We have a TP. I'm looking